Hey everyone, Coach Investor back to another video for today. So as I wrote in the community post, I bought extra shares of SoFi on Friday when the stock was down around 10 to 11% because of the whole Silicon Valley Bank fiasco. Of course, since Friday, a lot of things has changed. For now, the problem has been, let's say, taken under control. Now, does that mean that we're going to see now a huge green day? I don't know. In my opinion, I don't see why we should be seeing such a green day because, well, just a couple of days ago, the majority of people did not know, or maybe even still today, don't really know what was going on, what is happening. If you've been on Twitter or on YouTube, then yes, maybe you know what's going on. But let's be honest, the majority of people have no clue what Silicon Valley Bank is or was and what has happened throughout the weekend. So does that mean that the market should react very, very positively today? I don't know. Maybe it will be more because of the fact that interest rates won't rise as much as expected. We've been talking about before this whole fiasco about 50 basis point hikes, now maybe just 25 or maybe even nothing, a pause. Could happen. Of course, we have the CPI and PPI reports this week as well. So it's going to be an interesting week to follow. Now, first of all, I do want to show you something with regards to analysts and some price targets, especially when it comes to Silicon Valley Bank. So this is on Yahoo Finance. You can see here recommendation trends. Yes, over the last couple of months, you've had a bit less of recommendations here, but the majority of analysts had a buy rating on Silicon Valley Bank. You're going to say, yes, but analysts can be wrong. Yes, of course, analysts can be wrong. But when you are the majority and you're saying it's a buy, when the bank is now gone, I mean, you're not really doing your job correctly. Then a bit more news, and that directly involves SoFi and its CEO. So Anthony Noto acquired around $1 million worth of shares. When was that? Well, March 10th. So really a sign of confidence from him. Of course, we're going to talk about the whole SoFi thing. Are they affected? Could they be affected? Why SoFi safer than other banks? We're going to go over all of that in this video. Of course, do share your thoughts down in the comments below. Leave a thumbs up if you like this type of video. Subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So first thing is one of the tweets here from a thread of SoFi on Twitter, and this basically summarize it all, right? What the main difference between a bank like SoFi and maybe a bank like Silicon Valley Bank. So for our business, SoFi Bank drives high quality direct deposit customers. The deposits bolster and diversify our sources of funding, enables us to offer our best rates on loan while generating impressive returns. Now, what does this mean? Basically, SoFi, unlike Silicon Valley Bank, does not have those high cash burning clients. It has long-term clients with long-term deposits, not short-term deposits, not high-tech firms that need a lot of cash right away and are burning more cash now than before. So SoFi in that aspect is already different and much safer. Now they continued here with a blog. So they say they have ample cushion to the regulatory required equity to asset ratio. We have maintained a strong spread between what we charge on loans and our cost to fund loans despite a high interest rate environment. Importantly, we have no assets with Silicon Valley Bank. Our only exposure is a small lending facility, i.e. the ability to borrow money, under which we have borrowed less than $40 million and which is unaffected by the FDIC receivership of Silicon Valley Bank. By the way, if you're not familiar with everything that's been going on, how it could have been avoided and how simple the solution actually was, simple quote unquote, you can watch the video I released on Sunday. Then they continue by saying, in addition, SoFi Bank deposits are insured by the FDIC up to $250,000 per individual and $500K per joint account, and 90% of their deposits are under those limits and fully insured. And unlike with Silicon Valley Bank, where deposits were trending down, SoFi was the other way around. So they surpassed $7.3 billion in deposits, up 46% quarter over quarter in Q4 2022. The average balance for direct deposit members is just under $25,000, which is FDIC insured. In fact, over 90% of the deposits are insured, which is well above industry benchmarks. Now, of course, they do answer some important questions here. So what other sources of funding do you use for loans to SoFi members? Is there a limit or ratio of how much the deposit can use? They say they rely on deposits, warehouse line financing from large money center banks, and our own capital to fund loans to members. As of year-end 2022, we had borrowing capacity of $8.4 billion under loan warehouse facilities, of which $3.1 billion or 36% were drawn. Additionally, we have approximately $3 billion in our own equity capital that we can use to fund loans, and as mentioned above, $7.3 billion of deposits at the end of 2022, and we see strong growth continuing in 2023. In total, we have $18 billion of available capacity to fund loans and meet our liquidity needs. Now, we can obviously go and look at their own report. You can see here cash and cash equivalents, $1.42 billion. And so with over $7 billion in deposits, it's required to maintain a reserve ratio of around 10% of deposits, or in this case around $720 million, which, as you can see, it has about 200% of that needed funding, and it also has another $5 billion in untapped warehouse capacity. So again, from that aspect, SoFi, pretty safe and very, very well managed, by the way. And now going back to the blog, so do you have a portfolio of available for sale securities? As of year-end 2022, we have only $195 million in fair value of available for sale debt securities of our total assets of $19 billion. This consists primarily of US Treasuries 60%, with 48% of the securities due within 1 year and 93% due between 2 to 5 years. Again, risk management here is much better than what we've seen and talked about with Silicon Valley Bank. Now, before I continue, quick plug here of my free newsletter I release during the earnings season. Each Saturday or Sunday, you'll receive this in your mailbox, basically going over a couple of companies' earnings report, the major overviews, and then it will always have a link to either a video I covered on the channel or direct transcript and press release of that company. Again, it's free. Link is down in the description below. And so they've made it pretty clear that they are in a much better position than what maybe the market would have thought. Is that one of the reasons why I acquired more shares? Yes, I thought this was a great opportunity to buy the dip this time. Could I have been wrong? Could I have made a bad move? Because if this was not solved over the weekend, right, the whole situation, then yes, maybe I would have taken a bigger hit on Monday or throughout the next days. I know that's the risk I took, knowing fully well what could happen in a good and a bad way. But overall, again, say this again and again, SoFi is a very well run business. Management here has been doing very well. I expect 2023 to be another good year for the company. This story this weekend did not change a thing. And of course, if we're, let's say, fast forwarding 10 years from now, is anyone really going to remember what has happened in the last couple of days? Probably not. And so that will be it for this video. Of course, do share in the comments below if you've been buying some things in the last couple of days. Maybe you have some limit orders as well. Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.